But we're really delighted to have an outstanding co-chairs of this organization. And I'm going to be introducing Bill McNabb, now chairman of Vanguard. And when you look for co-chairs, you want people who are smart, who have had impact, and have a lot of zeros. Because this is a game about zeros. Billions, trillions of dollars. I give Bill big credit on smart, right? He's a Dartmouth grad, went to Wharton. He is an Eagle fan. But this year, that's even looking pretty good for Bill. In terms of the impact and the zeros, when Bill got to Vanguard, he's been there for a long time, and as CEO, it's been 10 years, Vanguard was managing somewhere about $500 billion. Today, with some market improvements and others, it's over $5 trillion of assets under management. So an enormous impact that Bill has really made. And I'm going to ask Bill to come to the stage. In addition, we're going to be announcing later today that Bill's co-chair of this effort, assuming that he does well on his presentation, will be Alex Gorski. Alex, you'll see, has also stellar numbers, smart guy, West Point grad, great numbers, great impact that he has had. And assuming he does well, and we're going to vote on it with Alex's piece, he'll also join as a co-chair. But without further ado, ladies and gentlemen, Mr. Bill McNabb, our member of the CEC board. Thanks, Darryl. Thanks.
You know, Darryl, I was going to be nice to the audience and leave out that Eagles thing. I didn't break out my "We're from Philly" shirt. Any of you who are sports fans who happen to watch the parade, don't do it with young children in the room, but the "We're from Philly" part is actually pretty amusing. So, look, it's a huge privilege to be here. There were two things Darryl and Mark didn't tell me when they asked me to do this. One was that they were going to run a poll about short-term, long-term before I got up here and was going to talk about it. And secondly, that I'm the only thing standing between us and seeing Mayor Bloomberg on stage, which will be an incredibly, I think, engaging as well as educational session. Having done a couple things with Michael before, his perspective on some of the topics that we're talking about, I think, is incredibly relevant. So, you know, CECP, as Mark and Darryl went through, has really evolved over the last, 15 years in particular, and it's become such a great convener. To be able to collect all of you in a room like this to talk about these really important topics, I think is just it's remarkable, and it's fun to see the evolution. The whole theme of long-termism really came about as we were talking about this a couple years ago, and you saw the poll results. Like, people do feel that there's too much of a short-term orientation. I was at a session recently where a couple of my peers who are in the private equity business had pulled together a bunch of portfolio companies, and the companies basically said, being private's a better form of capitalism. And as somebody who invests a lot of money in the public markets, that was not music to my ears. And I actually think there's huge policy issues around that. I think there are social issues around that. And so trying to, in a sense, get a balance, if you will, between the private markets and the public markets is going to be a very important thing. And there are a lot of elements to that, but one of the most important elements is time frame. And having the ability to think out longer term. And it's interesting, as a firm that invests lots of money on behalf of our clients in public companies, we're actually not public. And so we get to actually run ourselves a little bit differently because of our mutual ownership structure, which I actually see a lot of the benefits to. So we get the debate, and we actually understand it. So I think part of our responsibility, and I think one of the reasons for this initiative, is to really drive this sense that it is actually good for shareholders, for companies to think longer term. And we're going to talk a lot about that this morning. This letter that Mark and Darryl referenced, and you have a copy of, it actually came about for an interesting reason. We ran the first couple of these sessions, a year ago, and then in September, and then there was a panel after the session last September, and they asked the panel members, so what did you think? And they said, look, it's great to have companies up here talking about the long term, but frankly, we didn't think they were long enough term. And so some of the companies came back and said, well, that's great. Why don't you give us a little guidance? And that was the, if you will, the catalyst for putting out the letter, and as you'll see in the letter, there are 7 basic questions. Now, I'm not going to pretend that this letter is the be-all and end-all, but what I think it is a really good start to what the kind of conversation we need to be having. And if you imagine for a moment, those of you in the portfolio management side, we all do, everyone sits in on quarterly earnings calls, whether companies provide guidance or not, whether, whatever the topic is, but you sit in on those calls. Imagine if you just took one of those calls away and had the CEO and the management team, perhaps a member of the board, talk about their long-term aspirations and how they're trying to position themselves not just for today, but for tomorrow and for the future. I think it would be, as an investor, I think it would be a huge, huge benefit. I'm trying to understand that. So that's a lot of the work that's going to go on in this committee. That's a lot of what we're thinking about it. And the reason that we believe so strongly in this is that we think that getting long-term shareholder returns that are really vibrant is very much linked to companies having a sustainable long-term strategy. And companies that manage too short-term oriented, we don't think do as well over the long run. And there's emerging academic data on this, but if you just think about it from a common sense standpoint, and think about the companies that you really admire that have been around for 50, 75, or 100 years, they've somehow figured out how to make that long-term case to their investors as well as their other stakeholders. And so that's a lot of what we're going to really be all about on this committee. Now, today, you're going to have a discussion with some of the best CEOs in the world, and what you're going to hear a lot about is, the concepts of how do you actually create a strategy that is long-term and relevant. And I think a lot of it, I'm a strategy geek. I love this stuff, and I could spend all day on it. But I think a lot of it is really trying to get at 2 critical issues. And the first one is, why does the company exist? And very much related, why will it be relevant? Why is it relevant today, and why will it be relevant tomorrow? And I grew up in Rochester, New York, and we had a couple of iconic companies. There's one, I'm sure it gets talked about all the time, Eastman Kodak. And Kodak defined itself very clearly as a film company. And it defined itself as the best film company in the world, and they were going to sell you the most film, and everybody was going to have a Kodak camera, and everybody was going to have Kodak film filling that camera. And as I've started thinking about strategy from more of a purpose-driven perspective, one of the questions I've asked myself is, how would Kodak have fared? Because we all know what happened. How would Kodak have fared if its mission, instead of to be the best film company in the world, was something like, we exist to capture life's moments, or some really, equivalent kind of why. And if you think about that, they still would have had to be a great film company at the time, but they would have been much more open to any and all new technologies that would have captured the moment. I think many of you know, Kodak actually invented digital capture. And so was positioned actually to dominate that, but again, saw itself too narrowly. So I don't mean to pick on Kodak, but having spent the better part of my childhood and young adulthood in Rochester, it's always been something that's bothered me because it was such an iconic company. It was such an iconic company, and to me, it's a good idiosyncratic example of getting this right. So that's a lot of what we're going to be talking about, and what we hope to hear from companies is talking about why they exist, why they're going to be relevant, and frankly, then getting into how are they going to actually do that? How does the board interact with them? How does the board think about strategy and risk and oversight of that? So that's a lot of what I think we'll hear this afternoon, and I think it's going to be really exciting. One of the questions that's come up in our committee work and in some of the debates, certainly around the industry and academia, is the role of shareholder versus other stakeholders. And I'm sure that's going to come up, and we've certainly had some of that in our morning session. And our funds, so I'll speak for Vanguard. We manage roughly $4 trillion of equities, and a lot of that is in index funds, which are forever investors, if you think about it. So we obviously are very concerned about shareholder return. And then we get other people saying, but how do you trade that off against all the other stakeholders? I'm going to make the case that I actually think that debate is less relevant than we all think, because I don't actually think it's a trade-off. I think if you're actually managing a company for long-term value creation, you must take other stakeholders into account, and you actually must build something that's very vibrant for them as well. And that's where I think these ideas are going to converge, and that's a lot of, again, I think the work that's ahead of us. So I want to close with a huge thank you for all of you being here. Having so many participants from the investment community to really listen to these companies, to the CEOs. And as Mark and Daryl have indicated, we're going to need your feedback. This is very early innings in getting people to think this way. But more input, more feedback from you all will be very helpful in helping us shape this very, very important topic, because I do think it's incredibly relevant to the success of the economy, the success of society, frankly, to get this right. So again, a huge thank you for being here. We look forward to spending the afternoon with you. Thanks.